Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the news that really matters behind all the corporate jargon. Today, we're diving into a company called Seer Incorporated and what looks like a pretty significant, albeit technical, change in how their stock works. It might sound dry, but trust me, there are some juicy details here about voting power and ownership. Before we dive in, if you haven't already, hit that subscribe button. And if you want to discuss these filings and more with fellow finance enthusiasts, join our Discord community linked in the description below. Alright, so Seer Incorporated has filed an 8K form, which is basically a report for big events that shareholders need to know about. The main event here, happening on the 9th of December 2025, is all about their stock. Specifically, it is the conversion of their Class B common stock to Class A common stock. Now, you might be asking, what is the big deal about Class A and Class B stock? Well, it often comes down to voting power. Think of it like this. Class A stock is usually what most people buy, and it gets one vote per share. Class B, on the other hand, is often held by founders or early investors and can have multiple votes per share. In Seer's case, before this event, their Class B shares had 10 votes each. That is a lot of influence for each share compared to Class A, but according to their company charter, which is like their rulebook for how the company is run, those Class B shares were set to automatically convert into Class A shares on this specific date. This date, the 9th of December 2025. Was actually 5 years after their first big public stock offering, so it was a planned event based on their initial structure. And poof, just like that, all those super voting Class B shares turned into regular Class A shares. This means that anyone who used to hold Class B stock now holds the same number of shares, but with much less voting power per share. It is a shift from 10 votes per share down to just 1 vote per share. This is a really important distinction if you are an investor, as it directly impacts who has control and influence over company decisions. For the company itself, it signals a move towards a more standardized ownership structure, likely reducing the concentrated power that founders or early investors once held. Now, what about the money side of things? The report clarifies that this conversion didn't change the economic interests of the shareholders. This means that the value of their shares, their right to dividends, or their stake in the company, if it were to be sold or liquidated, remains the same. They are still entitled to the same slice of the pie. They just have a different number of votes on how that pie is managed. And here is another interesting point. The total number of shares outstanding didn't change because of this conversion. It was just to swap one Class B share became one Class A share. However, the company also filed something called a certificate of retirement. This essentially means that the retired Class B shares are gone for good and won't be reissued. This filing also officially reduced the total number of authorized shares the company can issue, both in total and specifically for Class B, which now, of course, is 0 since they've all converted. This retirement and the subsequent filing with the state of Delaware, which happened a few days after the conversion on the 12th of December, 2025, confirms that the company is tidying up its corporate structure. It is like cleaning out old closet sections that are no longer in use. For everyday investors watching Seer's stock, which trades under the ticker Seer, on the Nasdaq, nothing really changes in terms of how you buy or sell it. It will keep trading under the same symbol and the same identifier. The real change is internal, affecting voting rights as we discussed. Now, looking at the financial aspects here, while this filing isn't focused on the latest quarter's financial results, it is more about the corporate structure. The most impactful financial aspect we're seeing is the reduction in authorized shares, which could simplify future capital raising or stock. Based compensation plans, Seer Inc., had its IPO back in December of 2020, and this conversion is a natural maturation of its initial shareholder structure after the standard 5-year period following that IPO. So what does all this mean for Seer Incorporated? This conversion of Class B to Class A stock is a significant step towards consolidating voting power and a move towards a more typical corporate governance structure. It signifies the end of an era for the dual-class share system at Seer and likely means that the company's future decisions will be made with a broader base of shareholder input, albeit with 1 vote per share for everyone. The company appears to be moving past its early growth phase and into a more established operating period. The risk here is minimal for current shareholders as economic interests are preserved, but for future governance it is a fundamental shift. Overall, Seer is making a strategic move to simplify its capital structure. This isn't a sign of trouble, but rather a sign of maturity and a desire for cleaner governance as the company continues its journey. They've filed the necessary paperwork to make it official, and the Class B shares are now a thing of the past. Alright, that is our breakdown of Seer Incorporated's latest filing. What is your take on this stock conversion and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.